Welcome to the StockManor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson. And the Bulls make a run of it, and a hard run of it today. A big run up after a huge gap up. Now, what have we talked about in the past? Many things. First of all, I did say yesterday that I would expect a move by the end of the week, giving us a direction, maybe up or down. I'm not saying that this is ultimately the direction of up, but I will say that the low base kind of formations we had been watching on the daily are now more or less broken. No reason to be looking at them as a low base formation anymore. We got a big move to the upside, and we've also talked in the past about if you can't break support or resistance area, what do you do? Yeah, gap over it. And that's what we saw this morning. Remember this big, healthy 50-period moving average that was holding well yesterday? The Bears brought it in. Look what happened today. Gap up and over, run back, test that area, run to the upside into the end of the day. Finishing with a very big move in the markets of about 275 points in the Dow itself. The S&P strong. Energy was off the hizzle today at about 4.5%. 4.5% up today. 31 points in the S&P put it up about 3%. So followed very closely by the Nasdaq and the Dow, but looking very strong so far. We'll talk about that chart here when we get to it. But the Dow overall, gap up, pull back, gap move back up. Where am I looking at? The 10-200 area, one of those levels. Ultimately, this blue line, if you're looking to intraday trade this, watch this blue line for a break. So 200, then 10, 3, I don't know, 10, 200, and then 10, 325, somewhere up in there. There is still a lot of overhead resistance that's going to have to be dealt with by the bulls. None more strong than what we saw the finish at, and that was up here near the 20-day moving average. This blue line is a perfect fit on the SPX, and you'll see that when we get there. But pushing our way back up and towards that 200-day, watch that closely. Maybe, and it would not surprise me tomorrow to see a consolidation day coming into Friday after the big move up today. It would be very, I don't know, wouldn't be a big surprise for me to see that. Your breaks, though, to be watching are up and over that 10-200. That is going to get you at, near, around this blue line, and certainly over the 20-day moving average, which is now sitting right at 10-200. So watch that area closely for a break up and above. That might be worth a little test of a trade up in that area. Want to be cautious, though. These things don't always break on the first attempt, but it's very common to see a break up in the markets, and if this is a corrective wave of some sort, these things happen ferociously. They happen very fast, they happen very quick, they leave a lot of people in the dust, they make the Bears wonder, do I cover, do I not cover, what do I do here? Sometimes the Bulls don't want to hop in because the thing's just running so fast. And usually what these corrective waves will establish is an attitude or of well, we got it now. We're back. We're coming back. This thing is screaming up. There's no chance. We're definitely going to new highs here. And that's the mentality it usually gives everybody, right before it pulls the rug out from underneath their feet and then crushes their hopes and dreams forever, and leaves them with a burning Christmas tree in the middle of their floor. So be watching that closely. We'll see if that happens. Now watch these overhead levels, but if these are broke very fast, very quickly to the upside, it is very possible this is that quote-unquote bounce that everybody's been talking about for a while. We had a pretty good one back in here. This could be another one here. Could be short term, could be longer term. We just don't know yet. There's an awful lot of work and an awful lot of stuff that needs to be done before I'm going to start getting too bullish, or overly bullish, I should say, on the market. So let's call it short term for the time being. Looking at the Nasdaq here on a 60-minute, also getting back up and above this blue line and coming back to the 50-period moving average at the 1830 area. So above 1840 could give you a good opportunity to the long side. Trade it back up into the 1880-ish area. Watching that tomorrow. Nasdaq on a daily, you can see it back above the 200. Nasdaq's fighting back. Okay, still has some work to do. Got to get back above the 20. Got to get back above that blue line. But it certainly has a head start on things, as it is already back up and over the 200-day moving average. This has been a choppy market. I was looking at it in the bigger picture today, and look how we're just straight across. Going back to about May, what is this, 18th, 19th, somewhere around in here, it's straight across. It's just very, very choppy trading in here. The bears and the bulls are really fighting hard down here in this area. So you've got to be very careful, be very nimble in your trading. Weekly, also holding the 50-week moving average. Talked about this. I said the bears are going to, or the bulls are going to want to hold this. And maybe they dip down and maybe we'd see this by the end of the week and then a pop back up. Who knows? But this is the line they wanted to hold. And so far, at this point, they're doing it. Just as what we've seen in some of the other markets as well, this 50-week is holding just fine right here. The SPX on a 60-minute, look where it's at, right at this overhead blue line. And I'll show you on the daily how well this fits with what we're watching. I'm really watching for breaks above this 1090, 1092 area. Then ultimately we got to be looking at 1105 again and 1115 again and all those other levels we've been watching for a while. Keep in mind, going back to the end of May here, nothing but flat. This is nothing but choppy action. This has been nothing for a swing trader to be a part of, but the day traders have had pretty good opportunities in here. From a daily standpoint, coming right back up and near this 20-day moving average. So same position as we are on the Dow, just waiting for breaks up and over these areas. Ultimately, about this 1115 mark is really what you want to be watching coming into the next probably week's trading. Also keep in mind, as a just a kind of word of warning, we are approaching options expiration next week. Let's see if that adds any extra volatility. Did not get the break below 1045, so obviously no trade to the short side today. And with the gap up, maybe opportunities coming down the road for some good bullish trading. Here it is, the weekly 50-week moving average, and you can see how this thing wants to hang on sloopy. It's trying its best to get back up and above this 50-week moving average. Ultimately, it's not where the candle goes during the week, it's where it closes at the end of the week. That's the most important. And here we see it didn't look like it was going to be retrievable, to be quite honest, after yesterday. But look today, the bulls make a huge run of it and are going to, I'll tell you guys, tomorrow this is one of the lines to be watching. This is an area that the bulls are going to want to absolutely try their best to hold by the end of the week. Let's see if they can get it done. 1 day left. VIX on a daily also dropping today, almost 10%, but you can see this chop, chop, chop action coming back at or around towards that yellowish area. I call this the yellow zone down in here. Here's your red zone. We may drop out of that tomorrow with any more continued bullishness in the markets, but I'll tell you, the volume looked good, guys. It looked good for the bulls today. Let's see if there's any follow-through tomorrow. That's the most important. Apple on a 60 did finally find some ground down here. Bounced off a 240, 250 area and came right back up into the 250 mark. One of my other charts, I have very strong overhead resistance right here. So this 250 to 251 area is strong overhead resistance for the time being. Above it, though, makes a good intraday trade back to 253 and then 255. So be watching those pushing forward. From a daily, you can see it, though, landing right back at what? Yeah, below the 20, below the 50, and below this blue line. Apple needs some help here, but maybe this is the push up. Maybe this is that next big wave that we had been talking about or whatever for a while. It's anybody's guess, but you're looking for pushes up and over 251.50. That's the mark. Okay, 251.50 in Apple. Make it 251.75 to be cautious. Those are your areas to be watching coming into tomorrow's trading on Apple. I don't know. Can it do it? Can it make it back? Can it close above this blue line? I don't think so. I'm going to go out on a limb and say it doesn't make it. But it could come close. FAS on a 60-minute also pushing its way up today, coming back into this 23. Still good intraday trades here, but nothing to get overly excited about. With the break of this blue line, we could see finally some real action come, bring this thing back to about the $24 area. That would be my next overhead target on FAS. FAZ to the short side, of course, falling down today with the moves. Target down here would be one of these blue lines. That's right at or around the $15 mark, which has worked very well in the past for support and resistance. At below on whatever the 20-day moving average. That's at 1539. We closed at 1529 today, so you can see the choppiness continue. Guys, stay away from FAS and FAZ from a swing trading perspective. Stay away from the indices for that matter from a swing trading perspective. Keep it to intradays only on both the indices and the financial ETFs until we get some sort of real direction in the market. Maybe we'll see that tomorrow. All right, stay tuned, guys. Big move by the bulls today, coming up into very strong overhead resistance, but good volume. So we'll see if we get any follow through tomorrow. That's the most important thing, and we'll see you in tomorrow night's video. Bye.